everyone, and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video, we will recap Thursday's market action and discuss our trading plan for Friday. But first, if you want our free reports, click the link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on InsiderFinancial.com with your email. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all over reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area coded number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging services are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever. No Discord rooms or Telegram chat rooms. With that out of the way, guys, first up, speaking of reports, today we put out a new research report for our subscribers on a Nasdaq penny stock trading under $1. The stock closed up 21% today. Not bad in this market. We also have a new research report that we are dropping tonight to our subscribers. This is an undiscovered company that recently just started trading on the Nasdaq. The only way to get this report is to sign up. So click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. You can even sign up, unsubscribe, just to see what stock we are covering. You might be in it already. Stocks slumped on Thursday as another hotter than expected inflation report added fuel to concerns that the Fed will need to maintain its hawkish stance longer than previously expected. At the same time, the latest read on the job market pointed to continued strength on the labor front. The Nasdaq closed down 1.8%, the S&P down 1.4%, and the Dow down 1.3%. All 11 S&P sectors finished lower, with 8 posting a loss of more than 1%. This was led by a 2.2% drop in consumer discretionary, with notable slides coming from infotech and communication services. Overall, producer prices came in hotter than expected, while housing indicators and the Philly manufacturing index pointed to more demand weakness. The market is now pricing in more hikes. Right now, the market is seeing 3 more 25 basis point hikes to a terminal rate of 5.5%. You also had some hawkish Fed speak today talking about possible 50 basis point rate hike in the next meeting. Overall, it was interesting watching the market action, though. I thought the market was going to dump at the open. And they came in and bought the dip, and then we dumped at the last hour of trading. You can see today's price action. It was a very, very weird day. Bitcoin ran all the way to 25,000. You had a lot of the speculative names were at recent highs. Tesla, Silvergate, SI, Coin, they were all running this morning. It just didn't seem to make much sense to me. And then, with the producer price numbers coming in hotter than expected, I thought we were really going to, test 405 on the SPY, but we rallied all the way to 412, and then we got the last sell-off in the end of the day. I'm playing with SPY puts expiring tomorrow. I also have Tesla puts expiring tomorrow. So let's see how Friday goes for me when it comes to trading options. In speaking of options, if you're really going to trade just one asset, Tesla is the way to go. I mean, the swings are just unbelievable. I've been in and out of it this week with calls and puts, mostly calls during the week. Now I'm finally in with puts. It's just unreal. It's like, okay, if you're trading the S&P, the SPY options, it's like watching paint dry while, Tesla's riding a roller coaster. We got news out this afternoon. Tesla will recall 362,000 vehicles due to the risk that the full self-driving beta software could cause a crash. The vehicles under the recall order from the National Highway Safety Traffic Administration include some Model 2016 to 2023 Model S vehicles, Model X vehicles, Model 3 vehicles, and Model Y vehicles that are equipped with the full self-driving beta software or pending installations. The recall will be enacted through an over-the-air software update. Tesla said they disagreed with the agency's analysis. We also got the news today that Tesla terminated dozens of employees at its Buffalo, New York plant just as a unionization campaign began to fire up. The organizers reportedly have filed a complaint with the National Labor Relations Board. Consumer Reports also came out with its auto brand rankings and slotted Tesla in 17th place out of 32 brands. So again, let's see how Friday's action is. I'm positioned bearish. Let's see how it plays out. Anything can happen on Friday. Usually with option expiration, though, we will test the high or the low of the week. So again, I'm positioned to test the lows. Let's see how it plays out. A couple of winners, Box, BOXD. I talked about this one in last night's video. Today it opened at 53 cents and closed at 71.5 cents. Congratulations to all who watched and are banking. As I said last night, Box has talked to two potential suitors about a purchase of the company. The company is Box, known as an e-commerce grocery platform that sells bulk consumables to business and consumers, has had talks with Aeon Company and at least one other suitor, according to a person familiar with the matter. The company said on January 3rd that its board was exploring a possible sale. The company on January 20th also received $20 million in new financing. The company also entered into an amendment to its existing first lien debt facility with funds and accounts that managed by BlackRock. So the company is doing everything that, window dressing to set it up to be bought. This is a former SPAC merger that just has gotten absolutely annihilated this year. It was a company prior to this reposition as a SaaS company. It was primarily known for shipping boxes filled with toilet paper and potato chips. What else we got here? Aeon is interesting because they own 4.9% of Box. They also the executive officer at Aeon, Japanese name Tsukasa Ojima, he resigned from its board due to any potential conflicts of interest that may arise between Boxed and Aeon. So certainly things are in motion there. Nice price action today. Let's see if we can get BOXT over $1, and it would be a double then from where we opened today. Also moving is Manchester United. I talked about this one last week. They're getting ready to sell it, and there's a lot of people that would love to own MANU. Right now, the Qataris are preparing an opening bid for nearly $6.1 billion. In pounds, it'd be 5 billion pounds. The current market cap of Manchester United is just 3.9 billion. So if it would be looking at a 50% jump from here. So we'd be looking at about $40 a share. So certainly we think that there's going to be things happening here in Manchester United. There's a deadline for bids coming tomorrow. So certainly hopefully we hear more news that there's more bids. The Qatari consortium includes the country's former prime minister, and again, it's expecting a major bidding war. The Qataris will also face competition from British billionaire Jim Ratcliffe, the executive chairman of INEOS, who represents the only party officially declared firm interest in bidding for the team. Ratcliffe has reportedly engaged with Goldman Sachs to provide debt financing for a deal. Ratcliffe, according to different reports, he is UK's richest man. The owning Glazer family has signaled that it's seeking at least £5 billion for the club, though depending on the observers, some think that the strong interest will likely be in the £6 billion to £5 billion range. So certainly, again, we think this is cheap, and it's a great place to hide out in a volatile market. On watch for tomorrow, we got two other names. IBIO, the company just said that they would target MUC16, a protein expressed in several types of cancers, for its latest immuno-oncology program. According to the company, MUC16 is a large extracellular protein that is expressed in more than 80% of ovarian tumors. MUC16 is also overexpressed in other types of solid tumors, including lung and pancreatic cancers. Using its patented epitope steering AI platform, IBIO's innovative approach to this challenge allows its new monoclonal antibodies to bind to a specific region of MUC16 that is not shed or glycosylated, circumventing both tumor evasion mechanisms and potentially providing a powerful tool in the fight against cancer, the company said in a statement. Also on watch for tomorrow is DraftKings. I talked about DraftKings as an earnings play in my Sunday night video. Every weekend, guys, I recap the prior week's action, and I preview the markets and cover names that are most likely to move during the week. We nailed some big winners this week, so make sure you click the subscribe button and then the little notification bell to be notified when we go live with a new video. Again, guys, we run a completely free service, our email service, YouTube. We have nothing behind a paywall. DraftKings announced they reported revenue rose 81% in Q4 to $855 million. The sports betting giant pointed to continued customer retention and monetization in existing states, the successful launches of its sportsbook and iGaming products in additional jurisdictions, and structural sportsbook hold improvement. The company said customer engagement remains strong, and it continues to see no perceivable impact from broader macroeconomic pressures. Monthly unique payers increased 31% year over year to 2.6 million average monthly unique paying customers versus 2.5 million consensus. Average revenue per MUP was 42% during the quarter to 109 in the quarter due to improvement in the company's structural sportsbook hold rate and a continued mix shift into DraftKings sportsbook and iGaming products. To begin the year, DraftKings was live with mobile sports betting in 20 states that collectively represent approximately 42% of the U.S. population following the launch of its online sportsbook product in Maryland and in Ohio on January 1st. The CEO said, moving into 2023, we will continue to drive revenue growth and focus on expense management to accelerate our adjusted EBITDA growth. We have already taken several actions that resulted in an increase to our revenue guidance and significant improvement in our adjusted EBITDA guidance. Looking ahead, DraftKings raised fiscal year 2023 revenue guidance to a range of $2.85 billion to $3.05 billion versus $2.8 billion to $3 billion prior. An adjusted EBITDA loss of $350 million to $450 million is anticipated for the full year. Company expects to see positive EBITDA by fiscal year 2024. DraftKings is also trading above its 50-day, 100-day, and 200-day moving averages. So guys, I want to wish everyone good luck. Remember, we got a new IPO, just started trading yesterday. We really like this play. You're going to really like what the full report we have put out together for all of our subscribers. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of your pop-ups on insiderfinancial.com to get our full report on this recent Nasdaq IPO. We're expecting some major fireworks over the next coming days. Finally, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinion, is meant for informational, educational purposes only, and does not provide investment advice. Thanks for watching. Also, smash that like button and hit the notification bell to be notified when a new video is uploaded. Good luck, guys. Bye-bye.